All right, good afternoon, everybody. Sorry about the delay. It is Tim Apple Day, so we got that coming out soon. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure: I got out of JD.com today. Pretty much into the close. It basically got to my target. I assume it's trading down off the China tariff news that just hit at the close. So that's fortunate. I kept Meta, Tesla, and MSTR short. I closed out TQQQ right into the close, like right at the close. I was gonna keep it. Actually, I wasn't gonna keep it. And then the market got smoked, and I was like, wow, I was just about to close out of that. I'm glad that worked out okay. And then with the bounce back, I was still in the money on it, but given Apple being such a big percentage of the Qs and it being a big unknown, I'm in the money on it, but not a massive profit cushion, so I decided just to close it. I figure if the market sells, I've got those other three shorts that I added, Tesla, MSTR, and Meta. But if Apple rips higher, then those shorts won't be as positively impacted as a QQQ short will be. So I ended up closing that TQQQ short out into the close. We got Apple coming out in 10 minutes. Traditionally, I used to always cancel the afternoon meeting once a quarter. Scroll up, Varun. I used to always cancel once a quarter. On Apple Day and not do an afternoon meeting so we could focus on actually trading it, or I would just have it up and we would just kind of watch the price action together. So we can still do a little bit of that at 4:30 when the we can still do a little bit of that at 4:30 when the numbers actually come out. But let's do a quick recap here over the course of these 10 minutes while we wait on Tim Apple to report Apple earnings. The SPYs closed up 0.5%. The Qs closed up 0.5%. The IWM closed up 0.8%. The TLT is up 0.35%. So interest rates are down a little bit, but this ended up being off highs. And the dollar closed up really small as well. And most of that move higher came entirely off of the tariff news that hit into the close because tariffs bring the dollar higher and the stock market down. So that's what we have consistently seen. It was a crazy day today. Holy cow. Crazy day. I was really trying to lean in on the short side today. Microsoft, Meta, not Microsoft, sorry. Tesla, Meta, MSTR, Qs, and we had this early rip off the close that got heavier into everything into that move. And then when we died here, I was like, I got it. Just lo and behold for us to kind of somewhat randomly V-bottom and hold some support levels and have a monster rip to make new highs in the close in the SPYs. Then just for the tariff news to come out with 20, 30 minutes left or whatever in the day to almost erase the entire afternoon rally in 10 minutes to then give us a quick reaction snapback with MOCs hitting, which are actually sell MOCs, but quick reaction snapback again in those last 10 minutes. So all over the place when an announcement comes out like that right into the close. It makes it a little bit tricky, honestly, to position yourself on how you want to swing positions. And especially given that we have Apple coming out, like I said, in another 8 minutes now that will heavily influence the market as well. It just created for a crazy day. And these earnings names were also insane. This Tesla move, I mean, it made for a great opening short. 412 to 685. I'd taken off a lot of my position by that point, but I was still looking for like a 370 target on this. Just for it to, I couldn't believe the degree that this snapped back up to 409 quarter and then closed right around 400. Tesla was nuts. Meta was also crazy. I had started with a pre-market feeler on the short side on this. They ripped it higher. We started shorting more heavily actually into this bull flag. You had the bull flag failure here at 955, which tends to happen when the ADMA doesn't catch up to the base of the flag. And then I remember noting in this consolidation here, when it was roughly trying to hold the ADMA, that it actually started showing relative weakness to the Qs. There were a couple incidences here where the Qs were bouncing back a little bit, and Meta was not bouncing back at all. And then we actually got the bigger roll down in Meta to a complete, perfect Billy D unchanged gap fill. Then the market was able to bounce this thing back more than I expected it would. So at the end of the day here, we have a very indecisive candle on the daily chart in Meta, but still with a good amount of upside extension. So I decided to keep my short because I got a decent profit cushion on it, and I'm keeping it short versus that upside extension. At the end of the day, Tesla also, this is actually a kind of a technically bullish candle. It'd be more bullish if it closed a little bit better. But Tesla's still very sloppy in this price congestion zone. So I think Tesla really needs to get above like 420 to 425 to start looking a lot better. And if it loses today's low at any point in the near future, where there's a lot of support around this 384, that will begin to look pretty bad as well. Daily candle of the Qs is a doji. It's really hard to read. We actually closed near where we opened, or at least it's where we are after hours. Same deal with the SPYs. So my thought process broadly for the SPYs and the Qs remains the same. The market is very neutral for the Qs. It's neutral bullish for the SPYs, but has some resistance at this like 605.50 to like 607. Today's high is 606.60. We closed below that range. So bullish as long as we're holding above 600. You become more bearish on any of this stuff if you really begin to lose Monday's low. Monday's low is still really important for bears to get back below. Bulls need to clear through that 607 to start making the Qs look really good. Sorry, the SPYs look really good. Qs need above 380 in my opinion to start looking good again. Below 3. Man, I'm just talking too fast. 530 to start looking good again. Below 510 is when they start looking pretty bad. So we will see if Apple gives any clarity further on some of these technicals, which have been a bit sloppy and a bit tricky in this zone, in about 4 minutes or so when they report. China, phenomenal follow through today. Even with the tariff announcement into the close, these things are still holding in really well. Where did this trade down to after hours? This Alibaba, I'm just looking at it. Yeah, they sold Baba real quick down to $100.50. I mean, the ADMA on the daily chart in Alibaba is down to 93. That's still held up incredibly well as far as I'm concerned. But we'll see. This tariff news that's hitting is so hard to read, honestly, because one, it happened into the close. So we kind of have to see where we settle tomorrow. But that's also going to be so influenced by what Apple does. And two is, I mean, Trump seems to so regularly not follow through with some of the stuff that he says on this. Like, is this a threat? Is this real? It's hard to say. What we do know is that there's a lot of companies that are anticipating that this is real, so they're trying to get their goods in as fast as they can before these tariffs actually hit. And then we'll see to what degree they actually come through or not. But I mean, basic international economics here, you know. I'm just gonna leave it at that. Do I have anything else to say quickly here before Apple hits in these 3 minutes? I don't really think so. I think that kind of covers a really quick recap. The market technicals are just still in those range zones. I'm still trying to press to the short side on my thesis for this market until the technicals confirm outright bullishness, which they have not yet done. So yeah, I think that's all I got for a super quick recap before Apple hits. And let's see what happens with Timothy Apple here. Will he save the day? Like Pat was saying, it almost doesn't seem like the numbers necessarily even always matter anymore from Apple, as long as they announce a big enough of a buyback with it. Are there any major daily technical levels we should be aware of with Apple here? What's the implied move again on this? 240 is a little bit important. 247. On the downside, 225, 220. 220 was really important. $10. This thing has moved so much, even just the course of these last couple of weeks here. We got Intel out. What's Intel up to? I'm in it, and I haven't even been able to watch it. Up a little bit. Up really small. They missed on something, right? Thanks, Mike Reed. Probably should have asked Bill first, but thank you. Keep in on theme ideas in the afternoon meetings. Okay, cool. Yeah, less than excuse me, less than a minute here. Your wife's tired about you talking about the market. I love it. Josh is nervous. 30 seconds. Long Beach, California. I'm from Long Beach, New York. Originally, at least. Or really the town right next to it. 5 seconds. Apple up. Quick down tick, but now up. Apple continuing higher. Little beat on revenue. Beat on EPS. Beat on services. Big miss on Greater China revenue. iPhone revenue, also a pretty big miss. Wearables is a miss. Mac revenue beats, iPad revenue beats, total operation expenses beats, products revenue misses. This doesn't look that great to me. They beat on rev and EPS, but so many of those. I'm actually surprised they beat on revenue and EPS with all those misses in there. Apple now coming back down. Tim Cook says we are monitoring the situation regarding potential U.S. tariffs. Me too, Tim Apple. Working with Chinese regulators to bring Apple Intelligence to China. That's an important one, assuming we think that Apple Intelligence is working. iPhone revenue miss is I think a problem, and the Greater China miss I think is a problem. I don't love this report. We're now trading lower. And we're now higher. Let's see what's going on in the tape. I don't hate the idea of looking for short opportunities in this Apple off that report initially. I don't think the price action is necessarily confirming it yet. $339 might have sold small. Yeah, $339 selling on NASDAQ. I think. Or no, we broke it. We broke it. Tim Cook highlights best quarter ever. Maybe not compared to expectations, though. Three bright spots: iPad, Mac, and services. Services is huge. You get a good multiple off the services revenue. But I'm too scared of the iPhone miss and just how big that Greater China revenue miss is. It's like we're all expecting the slowdown. That's a big miss. No idea, Tate. Question from Tate. What are the chances that these FANG names get exempt from tariffs? Rumors have been circulating after 4 of the 7 Magnificent 8 CEOs were in attendance. The trade-off appears to be a requirement for each to invest a few billion to secure the deal. Do you think it's possible? It's possible, but holy cow, would you piss off small business owners that are involved in anything related to import-export? I just think that would be a phenomenal way to really bring down what's that called? Like the percentage of people that like the president or whatever. Me too. That'd be kind of mind blowing to me. From Sharir, question regarding NVIDIA. With all of this recent info, would you say NVIDIA is going to be on a free fall, or do you think it's just digestion? That's been the big question, right? For NVIDIA, I think we gotta let the technicals tell the story. I don't necessarily think free fall. They never guide on their initial report. If they do, I think it'd be during the call, and I don't think that they provide. They haven't. Have they provided guidance since COVID? I know that they didn't give guidance for a long time since COVID. Unlike every other company that would get absolutely punished for not providing guidance, they stopped. But anyway, on to the NVIDIA question. Consolidating below 127 to 130 is bearish. I don't necessarily think that or think that the stock is going to go into free fall. And I think if NVIDIA ever got its way down to like $100, we'd have to assess the situation of the market and everything at that time. But everything else held equal, I probably would be looking to buy NVIDIA with both hands at $100. In this area still, I'm very nervous though, because we just had a technical breakdown of a huge support level, and it's holding below that. So I'm not in a rush to be buying the stock to see if it can recapture the resistance level that it broke. If anything, I'd rather be shorting it here, looking for another leg lower. But free fall, I'm not so sure about free fall, but we'll see how it plays out. From Tate, what level needs to be reclaimed in the SPYs, Qs, and IWM where you are more bullish than neutral? SPYs 607, Qs 530, and the IWM I am more bullish than neutral. I'd like to see follow through 230, but the question that's been going through my mind is it possible? Is it possible? And some of this is based off that Charlie McGilligan note that we had talked about. Is there any universe where Mag 7 and Mag 8 undergoes a sell-off that gets increased by levered ETFs that those stocks now all have, and the IWM I'm not going to say goes up, but outperforms, holds in better, something like that. I do think my concern with that idea is that at a certain point, I think that selling in Mag 7 leads to selling in everything because correlations increase on the way down. But I'm nervous about these Mag 7 stocks right now from a market dynamics perspective. And the companies have held in really well so far yesterday and now today with this Apple report. But I didn't love that Meta report. The market liked it more than me. Meta still closed positive today. I didn't like the Tesla report. I know Tesla said that Elon Musk said that the company is going to be worth like $10 trillion and worth more than the next five biggest companies combined, but I didn't see any substance actually behind that. Didn't love it. I don't love this Apple report that's come out right now. It's not terrible. They beat on EPS and revenue, but missing on iPhone numbers. So I don't know. Market's doing a good job holding in, I think, actually, considering what these reports look like. But if you do start to sell down on these names, you really could potentially, even if it's a lower probability situation, get a real waterfall effect to the downside on some of these stocks. But it's certainly an if-then statement. Yeah, Vikas, that was exactly it. That was exactly it. Just enough extension on the daily chart combined with a report that I didn't love. So the report gave me a little bit of a bias to attempt to short that gap up, and then the extra part of it was that it was like a day 7 up into the gap up with the stock trading at $700 with the ADMA at 650 that I felt gave me enough room to look for corrective activity to actually short. Apple feels a little heavy here right now. From Tate, 100% agree with the levered single stock ETFs helping exaggerate the selling. It helps the buying too. That goes untalked about. Eventually, that's what's going to be the death of MSTR. Yeah, MSTR. Apple kind of breaking lows right now. Not giving anywhere near the measured move though. I don't know. I talked about MSTR a little bit today as I was short it. They continue to dilute the stock. I saw a research report this morning that said that MicroStrategy's market capitalization over the course of the last, I don't know, year or two or something like that has increased by 1,000%, but the stock has only gone up by 600%. Where's that other 400% gone? It's gone into dilution. And I think he's got some new scheme that he's using to dilute further through some sort of preferreds that are going to be trading under STRK or something like that, some other symbol. So, I mean, he just keeps levering and levering up in Bitcoin at higher prices at the sake of increasing the flow to the stock. I don't see how that doesn't end badly. Now, the flip side is it is levered Bitcoin. So, like I've been saying from the beginning, the biggest risk here is if Trump announced a Bitcoin reserve and that the U.S. is going to buy billions of dollars of Bitcoin and then other countries follow through. You could see MSTR at $1,000 if that happens. But I really think that if that does not happen, eventually at some point, look, Bitcoin's always been a volatile, I don't know what to call it, asset, commodity. That if you got I don't know, I'd love to know if someone's really good at math and can figure it out, and it's probably difficult because it would be more art than science to try to figure it out, but there's got to be a certain percentage of pullback in Bitcoin that basically equates to MSTR being at zero. Because at a certain point, MSTR, I think, gets forced to begin to sell Bitcoin on the way down, and then that just becomes a feedback cycle of selling on the downside, where MSTR is forced to sell Bitcoin, which drives MSTR lower, which drives Bitcoin lower. I mean, there's a chance that Bitcoin isn't just the death of MSTR, but MSTR is the death of Bitcoin, to be totally honest. More likely not. Pretty low probability situation, but there is a probability that a Bitcoin sell-off, it gets exaggerated by an MSTR implosion to the point where it basically ends this whole crypto phenomenon that we've been dealing with. I don't think it's impossible. But the flip side on that is that Bitcoin has done an incredible job surviving multiple extinction events. Um, about it. I've got someone in the YouTube AI is a superpower telling me to check out MicroStrategist. That what I'm talking about is on their website, so I'm going to check that out after the afternoon meeting today. MSTR's average is 65,000. They keep averaging up. I think David, didn't you just tell me that they're doing another round right now of raising money, which is obviously going to be to buy even more Bitcoin here. So they'll just be continuing to work that average higher. It'll keep working until it doesn't. MicroStrategy Ballistic or something like that from AI is a superpower in YouTube. Their average was $20,000 not even 3 months ago. Yeah, they're doing another convertible right now. That's just to buy more Bitcoin up here. Yeah, so I don't know. I mean, look, stocks, markets pull back 20% all the time. Bitcoin has had how many 70% pullbacks? Multiple. There's got to be a breaking point on that thing somewhere. There's a question from Rex on Tesla. Question about my execution. I traded Tesla twice this morning to the long side. Don't you know I was short? Tesla was on earnings and had a couple upgrades this morning. The first trade I took was a 5-minute RDR. Corrected back to the 80 MA on the 5. I got my 1-to-1 kick. Pushed a little bit and then it stopped me out. Then Tesla continued selling into yesterday's low with decent volume there. I went long again at 10.07. Ooh, look at you. Almost at the low. When Tesla gave a decent volume, but not going any lower, and was forming a hammer candle there, and the market corrected to the 80 MA on the 15-minute with Tesla getting extended. I thought it could bounce a little bit there. My average was 386.61. Okay. Did you get stopped out on the new low? The lowest that time was 384.43. But at 10.08 it ticked to 41. So yeah, I made a new low by 2 cents to stop you out, and then it moved higher. Can I give some feedback on that? So look, I think your execution is good. I think your technical thought process is sound. Does anyone know if there's news out on BORR after hours? Just upticking a little bit. I think that your technical thought process was sound. I don't have a lot of feedback for you. You know, sometimes stocks will tick a new low by 2 cents like that and then go, especially something that's very volatile and expensive that trades with a decently wide spread on huge amounts of volume. Only other thing, and I kind of wish the question was being answered by Pat, because I'd be curious to see what Pat's feedback on it is on these types of situations, is I don't know. It's very dangerous to do what I'm about to say, but I've generally been having a lot of success with it, which is just to not have that stop loss in. Instead of having that stop loss, I kind of do that thing where I trade it to the 80 MA on the time frame, which means I'll let it run against me with no stop loss and potentially unlimited risk. and I manage it to the ADMA where I will get higher on the way down and reduce on the way up, and I will liquidate the position when it touches the ADMA on the 5, no matter what. Which also means I'm not looking for more follow through on the upside. You could adjust that game plan to trail 25% of the position for further follow through past the ADMA. But if it's going against me, that just tends to be what I do. I shorted Tesla here today. I shorted it on the 1255 bar, the fourth green bar in a row, at just over 406, just barely over 406. And I got a quick little pullback to 404.80. I was able to get a couple covers in that, but I was looking for a move to the ADMA. And then it bounced and made a new high. I didn't stop myself out on the new high. I added more. But the game plan was still the same. It was to liquidate the position on the touch of the ADMA. So, you know, the risk here is eventually that the stock, the ADMA gets above my initial price because the momentum continues. And I basically have unlimited risk because I'm not trading with a stop loss and I'm getting heavier as it moves higher. But it's almost like a mathematical law. And it's particularly dangerous, by the way, to do what I'm describing in an earning stock, because that's where momentum really rears its head more than not. And this was an earning stock. But it's almost like a mathematical law that eventually all stocks and markets, when they extend, will have to touch the ADMA. It's just a matter of how much extension you're going to get before that ADMA happens. So in this situation, I shorted a little bit above 406. I was really looking for a move to 404 at that time, even though the ADMA was at 402.50. I understand that the ADMA is going to continue higher. But I got a couple covers. I added more as it moved higher. And then I got all out by like 405.70 because the ADMA was rapidly catching up. I was actually trailing above the ADMA by like 50 cents or so. So the high here on that ADMA was 405.60. So I ended up getting out of my entire position at 405.70. So that meant that like my original stock, let's say I just shorted at 406, I only made 30 cents on it, which was not the goal. I wanted to make more. But I didn't get stopped out when the new high came. I actually made extra money by trading it kind of all in between, so that when all was said and done, I didn't make as much as I would have wanted to, but you know, I still made actually a decent chunk of change because I was like buying it and selling it in 50-cent increments, and I got a whole bunch of 50-cent increments over the course of it actually touching the ADMA for the first time. So, you know, take that information with you will, as you will. I still think it's better for newer traders or smaller account traders to trade with these very hard stops. That will mean that you risk getting shaken out of trades that work, like what happened with you. So that's one risk you can choose to take, is the risk of getting shaken out. Or the risk that you can choose to take, which I would only think is a good idea for people with larger accounts and a little bit more experience, is to be willing to take on that extra almost unknown risk, add more as it goes up, work the position, recognize that your loss comes in if the momentum is too great and the ADMA catches up too much. You could potentially lose a lot too, especially if you're doing it too heavy on too tight of increments. So that's the trade-off. Significantly more risk, but I think a much higher probability of success and zero probability of getting shaken out, versus a higher probability of getting shaken out, but very clear and defined risk. So that's the extent of the feedback I have for you. Dave S. has a follow-up question. Wouldn't that put you in a scenario where sometimes you're actually negative on the trade? Yes. Even after hitting your profit target, basically the ADMA, if it goes too high before giving an ADMA touch. Yes, 100%. That's the risk. That's the risk. So, you know, the scenario is I'm shorting at 406. It price corrects between 408 and 406. I work it a while. ADMA catches up to 406. I end up getting out of my position at the price I originally entered on, but I make money. Another scenario is it gives me some volatility and then just price corrects down to the ADMA. That's typically the best. That's where I'm going to make the most amount of money. Scenario 2 is I started too early at 406. It rips up to 412. I'm getting absolutely smoked on the position. I'm mitigating that loss a little bit by working the volatility. I end up liquidating the position at 410. I'm overall net negative on the stock by some unknown amount. The $4 I lost on the original core position, plus everything I lost on the ads that are beneath 410, minus the amount of money I made on the selling and buying in between. But I end up down in it. But those are pretty much your three scenarios. That third scenario where you're losing money has the potential to be a very large number if the momentum is insane. So you got to be patient would be the first thing I would say. Pat's better at that than I am. You got to be patient. You don't want to be too early. You're better off missing it than being too early when you're implementing that strategy. Remember, I shorted at 406, and Pat was like, if this thing, in the next 2 minutes can get to 408, like 50 or something like that, I'll join you. Perfect example of Pat being more patient than me, and Pat probably having a higher win rate than me on, some of those trades. I'd probably make up for it a little bit by being more aggressive than him, and that benefits me in some other ways sometimes. But can also damage me a little bit. And what you just described is exactly the way in which you lose money with that approach. Show up with a question. Let me take a quick look at Apple real quick. Apple's still just being range bound. Very boring. Show up giving me a screenshot that we can look at. That is a Tesla chart. It looks like a 5-minute chart. Hi, Derrick. Could you please help me review my trade? I traded Tesla today with lower tier. I was expecting a V recovery after extreme extension, assuming you mean on the downside here. And I'll look at your screenshot in more detail in a second. But kept getting stopped out. Am I following too closely? What additional items should I look for? All right, so I'm looking at your Tesla here. I'm having trouble identifying where the trades are. I see an execution dot on a 1035 candle that's a green dot. Was that a first buy? And then I don't see any execution dots until the time frame that I was just talking about here around 1 o'clock. So I see your numbers here, but I'm having a little trouble understanding the chart that I'm looking at. So that was a first buy. I don't see you getting stopped out. Oh, did you get stopped out? I see it on this candle right here on the 1055 candle. I think I see a dot there. Is that right? So basically you bought the 1035 candle, and then you got stopped out on the 1055 candle. I don't like the trade. I don't really understand it too much. I guess it's going into a very small pattern of higher highs and higher lows. You're expecting a V-shaped recovery. So the first thing I would tell you is that full-on V-shaped recoveries are the rarest thing in the stock market that exists. Very, very rare. If you're going to get a continuation higher, most likely you're going to get a deep pullback at some point that creates a higher low that then works. And that's actually exactly what happened here. It tries to do a bit of a V-bottom, gives a really big bounce back, gives a deeper pullback, gives a higher low, and then gives its next leg up. So that to me, that's very standard. I don't like this entry execution. It feels very much like chasing to me. Stock just bounced. Stock was the weakest earnings name that was out there at the open. Sellers are really in control of this thing. But it traded down from 412 to 484, right? So huge move. Bounces back, the absolute high, or I guess when you're buying it back, it looks like, yeah, you bought almost at that high. You're buying like 396. I'm not a big Fibonacci retracement person, but this is like a eyeball on it, like a 1/3 retracement back of the initial down move. You don't want to be buying a 1/3 retracement of a huge down move like that after it already retraced a third. I like Rex's trade much better, capitulating volume with downside extension, than I just I'm not trying to overly down you. I'm just trying to be honest and give you some feedback. I just really don't like the buy. And then the stop loss, it looks like you're using this tight pivot here, but you're trading like a 5-minute pivot now that's after 10:35. This is when the 15-minute chart tends to become more important. And again, a stock that's moving this big, think about this opening range. You're not going to go from, and probably not, go from a stock that was ranging $30 or whatever the hell this is on its initial move to then being able to hold pivots like every $3 or $4. I just think it's way too tight. You needed to see like the bigger potential pivot low come in, assuming you even have a bull thesis. And I'll be honest, even though this thing worked its way all the way back to 408, I don't even like the idea of having a bull thesis on the stock based on the technicals of the opening selling drive. I think that even though this broke higher, I think that the higher probability situation was you get a big bounce back, and this bounce back exceeded my expectations, but you get a big bounce back, somewhere you get a lower high or a wedge, and that wedge actually breaks down and the stock continues lower in the direction of the initial move. I think that that's actually the higher probability situation. This didn't do that. It ended up wedging and actually breaking up and giving a hell of a retracement higher, as did, like we discussed already, the market gave a hell of a retracement back, especially the SPYs, off of its low of the day. But yeah, I just don't love the price. It feels like you're chasing, and I don't love the stop loss. It feels like it's too tight. And I'll be honest, I don't even love the thesis of the recovery. At that point, I think you want to be taking advantage of it when you can off of the extreme downside extension if you're a believer in it. And Rex was buying that, but for me, it's not something I want to even be involved in. And just trying to eyeball your trades that you have as 2, 3, 4, and 5. I can't tell if those are shorts or longs at that point, because the first executions, you got a bunch of red dots and a bunch of green dots that seem to be like very, very close together, and I don't know which one went first. So I don't know if that's a short sale or a long sale. I don't know. It's the same thought process here. You could argue that this was a bull flag for continuation, and I was actually nervous that this was a bull flag for continuation. So when I was shorting it, I was just shorting the extension for the correction back to the ADMA, like I explained with my own trade there. That's all I was looking to do. I was not expecting that this thing was gonna be able to actually truly retrace back down, because I didn't think it should have been back up there to begin with. So now, to me, the fact that this was able to get back up to these prices to begin with tells me that there was actually a much bigger underlying bid and much more bullishness to the stock than I expected. So for me, this was just a quick short off the extension, as I was just like kind of explaining what I did with my game plan, and I was out on the touch of that ADMA. Done with it. I still had a core position from the beginning of the day that I've had all day, and I'm swinging. But for that extra trade that I took there, second I got to touch the ADMA, I'm not fighting this bull flag on a stock that went too high to begin with to short it. But it looks like your green dots, which would be buys, are once again all way too microscopic and tight. You don't, like, I'm not seeing any green dot. Like, I want to see either what I was just describing with my strategy and my approach on it, or I want to see what Rex was describing with his strategy and his approach on it, where you found a pivot high to be short versus, and, I want to see you getting stopped out. I mean, I don't want to see you getting stopped out. I want to see you making money. But if the trade's going to fail, I want to see you, if you were trying to trade it like Rex, getting stopped out at highs here on the break of the 105 bar, which would have been a shakeout, and then the trade works. Where your green dots are, they're not near any pivots or anything. It just seems like you were almost trailing this. Like this looks like you got stopped out of one trade here at the 120 candle. It looks like you were trailing per candle. And trailing per candle is something I've always really disliked. I don't think that the random candles highs and lows mean anything. I think that candles highs and lows are only significant when they are marked by potential pivot points that are represented through tails, basically, or through like this is also a pivot point where it's like a king queenish type of thing. That makes that high is then significant. So I either want to see people trading versus significant points to the market, like what Rex is doing and describing, or I want to see people, again, if they can afford to do it, it's very dangerous. If you're a small account, you could blow up your entire account doing what I'm describing. Or I want to see people trading kind of the way that I described, where you're building in, building out, giving it some room based on that extension, but having a game plan where you're taking a counter trend extension trade and liquidating on that ADMA or whatever. So that would be my feedback for you on that. We got news out on WBA. WBA getting smoked on suspending their dividend. That's not good. I hope that helps, Shub. All right, the Apple earnings call has probably started. We'll see what comes of it. So far, the Apple move has been very boring. Just after 5 o'clock. Looks like I got through the questions. I'm going to check out the micro strategist that I was told about here on the YouTube. So thank you for that. And we'll wrap it up there. We'll see where this market gaps to tomorrow. We'll see where Apple gaps to tomorrow. Have a great night, everybody. I will see you all tomorrow.